Good morning, everyone, and thank you very much. Thank you very much for joining me. This is the morning market review. It's Friday, the 7th of October, and it's 2022. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just going to bring up the disclaimers, and I just want to do a check-in that everyone sees the screen and can hear me. Of late, I have a habit of having one or the other off. Can you guys hear me and see the screen? Okay, cool. Thank you. All right, just going to bring up our market commentaries disclaimer here. And our references, Scope, TradingView, and Bloomberg. Specifically with Bloomberg, the 5 things to start your day. Bring this chart up just to have something on screen while we go through the Bloomberg. And then we'll start doing some analysis. So the first headline reads Hammer On, which reads as follows. Federal Reserve officials kept up the drumbeat of support for extending their run of interest rate hikes, stressing the need to quash inflation that's proved unexpectedly stubborn. 5 officials from Governor Christopher Waller to Cleveland Fed President Loretta Mester delivered a resolutely hawkish message that inflation is too high and they won't be deterred from raising rates by volatility in the financial markets. The median of the 19 policymakers' latest projection sees another 1.25 percentage points of increase over the 2 remaining meetings of the year, with investors pricing a 75 basis point move when they gather on November 1st and 2nd. Fed forecasts show an additional 25 basis points increase next year, with policy staying at restrictive levels until 2024. Second headline reads Nuclear Armageddon. President Joe Biden said the US is trying to find an off-ramp for Russian President Vladimir Putin and worries his threats to use tactical nuclear weapons are real and could lead to Armageddon. I don't think there's any such thing as the ability to easily use tactical nuclear weapons and not end up with Armageddon, Biden said Thursday at a fundraiser in New York City. Biden's comments are in contrast to those from National Security Advisor Jake Sullivan, who said last week that the US does not presently see indications about the imminent use of the weapons, and that the threat is the latest in a string of similar warnings Putin has employed since the invasion began in February. Next headline, when banks meet Kwarteng. Chancellor of the Exchequer, Kwasi Kwarteng, discussed ways to ease the cost of living crisis, including giving more time for energy and council tax and council tax payments with the bosses of UK banks on Thursday. The bosses of banks, including mortgage giants NatWest and Lloyds Banking, attended, according to a Twitter post by the Treasury. The meeting came after banks pulled more than 40% of mortgage products from the market following the Chancellor's so-called mini-budget on September 23rd. Since then, the cost of a 5-year mortgage has breached 6% for the first time in more than a decade, while the 2-year rate is at its highest in almost 14 years. Next on Credit Suisse. Credit Suisse is trying to bring in an outside investor to inject money into a spin-off of its advisory and investment banking businesses, as the firm's leaders aim to put the finishing touches on their planned overhaul. Businesses being targeted for a boutique-style future include the advisory and deal-making teams, alongside the leveraged finance unit. People with knowledge of the deliberation said the bank is interested in an outside investor to take a partial stake in order to provide capital and help fund the costs of hiring and keeping talent, the people said. Meanwhile, an analyst at JP Morgan says Credit Suisse is worth at least $15 billion as its shares are still worth more than the market is currently pricing. Last headline, Musk must make good. A Delaware judge halted a court case against Elon Musk over his $44 billion purchase of Twitter, giving the parties more time to complete the deal. Delaware Chancery Judge Kathleen McCormick said if the transaction isn't done by 5 p.m. on October 28th, she will set new trial dates in November, according to an order issued Thursday. The ruling hands a partial victory to Musk, who early in the day had asked the judge to pause Twitter's lawsuit against him ahead of an October 17th trial date, but it also gives Musk a deadline by which he needs to make good on his April agreement to pay $54.20 per share, an obligation he has previously tried to abandon. Coming up for today, European equity futures edged lower ahead of a key US jobs print. So we've got the NFP today, right? If you want to join us for the live trade, I did put the link in the chat. All right, so the US jobs print's expected to underscore the need for more Fed tightening as investors assessed weaker chipmaker earnings. BOE Deputy Governor Dave Ramsden and the Fed's John Williams speak at events. Nobel Peace Prize is going to be announced. Expected data include Norway GDP and Italy retail sales. JD Wetherspoon and Tilray Brands report earnings. All right. Let's take a look at some charts. We're going to start off with the real rate. And you can see the real rate actually, certainly, in my opinion, the key driver of the US dollar. We noted the Rennes candle that it completed here, suggested this was the higher trough, and that the US dollar probably find some sort of catalyst or lead off of that, and it looks as if that is indeed the case. For today, so we're looking at a daily chart, just to be very clear. For today, I've added the correlation coefficient of the two, and we've got 87, and that's almost, you know, a perfect correlation. We 13 points away from a 100% correlation. So there is certainly a strong positive relationship between the greenback and the real rates. And we just read in Bloomberg how the Fed still very much pushing ahead with their aggressive hiking policy. And you know, the question, of course, is, well, is this priced in, not priced in? Well, we can keep an eye on the real rate, and as long as the real rate shows some sort of movement there, one would expect the dollar to show some sort of movement as well. And this sort of cause and effect here, I think, is the key driver of the market at the moment. And if we go ahead and bring up some charts, let me just change this to the main layout. This is from yesterday. What we can do is, before we even get to the NASDAQ, let's just take a look at Euro. So we're starting off this conversation with the point that dollar has now started adjusting upwards because the real rate's adjusting upwards. So that's the first point. And if you take a look at the euro, okay, well, I'm sure this must be over here. Okay, so we were looking to see if this candlestick now is a lower peak, which was labeled previously LP question mark. I'm going to keep it as LP question mark. We'll only know at the end of next week if it is a lower peak, because we will look for the reference candle. But you can just see how the euro has faded. Can you see this is what we call a gravestone doji. In other words, the market opened here at the left tick. Okay, bulls pushed it up to the high of the week, and at the high of the week they promptly lost control to the bears, and the bears have now just pushed price all the way back, and we right at the start of the week. In other words, you ask your question, who's in control? Who's in control at the moment? And a gravestone doji implies the bears are in control. And that's on the weekly chart. We can see that the stochastic here is just absolutely savage in terms of its downwards momentum. Okay, It's been below 20 or oscillated around 20 since June last year. Now that's a bit since July last year. And another way to measure momentum direction, you can take a look at the RSI here and just ask yourself, is it above or below 50? 50 is your border between the bullish side and the bearish side. Well, we've been sub 50 for just as long, so the momentum is obvious. It's down, but we don't even need the indicators to see that. The trend itself, the peaks and troughs, lower peak, lower trough, lower peak, lower trough, and the key here is, of course, in my view, what happens to US real rates. When Q4 first, as we moved into Q4, we're only a week in, but I was very cognizant of the fact that real rates were overbought. But that's sort of corrected already. I'm very surprised at the speed of the correction. On the daily, the weekly, we still got to watch. Let's just bring in the RSI for the weekly here. Okay, so there still is scope for normalization here. It did breach 80 to the downside briefly, and that was when the euro was at its apex, right? Well, now that's gone, so we're back above 80. So I think the real rate still has scope for pullback, but the sort of the communication and the rhetoric coming out of these Fed speakers are just absolutely hawkish, and that's what we're seeing on the daily. So we go back to the daily. There's the correction on the daily, and now it's heading back towards that 80 level. Let's go back to this chart here. All right, so the daily here. So taking a look at the daily, it's not the easiest chart that we've ever seen. So the weekly certainly, I think, is an easier chart to assess. There is a bearish bias on the Euro weekly. The daily chart here, I would prefer a few things here. I would prefer the price to be in zone 3. We're not there. Okay. So a cross below would certainly be more comfortable for me. So we're sitting in neutral, and the stochastics in no man's land, right? We right in the middle here. So I don't like that at all. In that regard, it's probably worth just keeping an eye on this. Having said that, I do have a short position on euro, but the reason that I had the short position on the euro is I just saw the crosses coming down here, and I saw the dollar was lagging the real rate. So let me bring this back up. Okay, so I actually put it on because yesterday there's actually an article on our website, and you can see the actual timing of what I was looking at on that article. We had the black line here had been breached, and yesterday, I think in the article I use a green line here. It hadn't been breached yet, but it looked like it was about to be breached. So I put in a small short on the euro. I'm going to close it off actually, I think, because it's not lining up with the with the trading methodology. But I just wanted to be sort of transparent there. I would be much more comfortable with the daily coming down. Much more comfortable with the daily coming down. That's the daily momentum starting to line up with the weekly momentum, right? Let's just take a look at the US dollar. Okay. So the US dollar here, again, the momentum here has been really obvious. You can see that we have been oscillating around the 80 for just the longest period. And if there's some confusion about, you know, where are we in terms of the 80, well, perhaps sort of the 50 on the RSI clears that up. It's interesting that the weekly overbought here has cleared. Okay. The dollar here is starting to move into zone 1, so it's starting to exert that strength again. But again, to really maintain any sort of impulse here, we've got to get into the 80 and hold. We're not there yet. We're in that no man's land, very similar to the euro. So just sort of an element that I'm not particularly happy with. What's really what's really obvious in terms of classical price action is that just 1, 2, 2, 3, and it looks like we're going into that impulse here. So that's just want to see a little bit of cooperation here from the momentum side. All right, I think what we'll do is also just take a look at DAX. It's just about to open now. Let's see what's happening there. I would expect pressure on the DAX today. Why would I expect pressure on the DAX today? Real rates. Okay, so if we go, yeah, we're on the daily. Let's just go down to the 4-hour here. So if we see some sort of moderation in the real rate, okay, and I use the US as a general proxy for global required rate of return, then of course there may be some sort of support for the DAX. Let's just bring the DAX underneath this and talk about that in terms of the rate. Okay, so what can you see here? You can see here a rate coming down, and you can see DAX moving up. That's time value of money. We've looked at that many times, right? We won't do it now, but I think we'll need to look at it again next week. Here is your rate moving up. Okay, what's happened to the DAX? Well, it's put a ceiling on the DAX at sort of your in a best case scenario, and it's actually starting to drag DAX down now in a worst case scenario. So if there is going to be more movement in the real rate to the upside, then I would expect pressure on the DAX. If there is some sort of moderation in real rates, I think that helps DAX somewhat. Just going back to market scope. Again, not the cash markets just open, so my system tends to hang a little. Just give it one moment. Yes, Katie, I have got that in my list of things to do. Yeah. Okay, no worries. I'll reply to your email. Yeah, I'll do it right after this. So the DAX here, similar to the euro, in that, well, we're in no man's land, or neutral, I guess is the better on the zone. Zone 2 is the neutral zone, but we're in no man's land here on the stochastic. So I guess the clue here is to watch the real rate, and I think that DAX gets its direction from the real rate, and I think as the trend sort of settles, that will start being reflected in the stochastic. But these neutral readings here, not they're not ideal, because if there's going to be a trend, it's going to take place either in zone 3 for down, or it's going to take place in zone 1 for up. We're in neither. It's a little bit of a difficulty at the moment. I think we've seen worse. I think the rates, in my in my most recent trade, the rates played a key pivotal role. But now I think the dollar's caught up. Okay, so we've just got to, I think, defer back to the actual zones, top-down analysis, etc. All right. Any questions? Please go ahead and ask. We do have that live trade. The link is in the chat. Please join me if you want to be a part of it. It's an open invitation. You'll be most welcome. Okay, Rob, thank you very much for that feedback, and I really appreciate it. Thank you. All right, let's wrap up here, guys, and then I shall speak with you 10 minutes before. 10 minutes before. Hang on, Chris says he doesn't see the link in the chat. Let me just send this to you, Chris. Do you get it now, Chris? Okay, cool. All right, let's wrap up here. I'll see you guys. See you guys later. No worries, Lisa. I'll put that on the. I'll put it on Telegram. I'll put it on Telegram. All right. Cheers, guys.